Globalization has reshaped nearly every industry, and property and casualty insurance is no exception. From expanding market opportunities to creating new risks, globalization has transformed how insurers operate, compete, and manage risk. But what does this really mean for P&C insurance? Let's break it down: the good, the bad, and the ugly. Let's start with the good. Globalization has opened up new markets and opportunities for insurers. As businesses expand internationally, they need insurance coverage in multiple countries. This has allowed global P&C insurers like Allianz, AXA, and Chubb to provide seamless coverage across borders. Advancements in technology and data sharing have also improved the way insurers assess risk worldwide. Access to global catastrophe models, weather forecasting, and financial market data helps insurers price risks more accurately, reducing uncertainty in underwriting. And let's not forget innovation. Global competition has forced insurers to adopt better technology, from AI-driven underwriting to blockchain-based claims processing. This means more efficient processes, better customer service, and in some cases, lower costs for policyholders. But now let's talk about the bad. One major challenge is regulatory complexity. Every country has different insurance regulations, making it difficult for insurers to operate seamlessly across borders. In the United States, P&C insurance is regulated at the state level, whereas many other countries have national regulatory bodies. This difference means US-only insurers have a different compliance burden than global carriers. Globalization also exposes insurers to currency risk and economic instability. When operating in multiple countries, insurers have to deal with fluctuations in exchange rates and differing economic conditions, which can make profits more volatile. Now, for the ugly, the downsides that have serious long-term consequences. One of the biggest concerns is globalized risk exposure. As companies expand and supply chains become more interconnected, insurers are covering risks they may not fully understand. Take the COVID-19 pandemic. Business interruption claims skyrocketed worldwide, and insurers were caught off guard by how deeply interconnected industries had become. Another issue: increased competition and market consolidation. As global insurers expand, smaller US-only insurers may struggle to compete. Global carriers have greater financial resources, diversified portfolios, and economies of scale that allow them to undercut pricing or offer broader coverage. So how does this all impact US-only insurers versus global carriers? US-only insurers such as Progressive and Travelers focus primarily on domestic risks and operate within a familiar regulatory framework. This allows them to specialize in the US market and tailor products specifically for American businesses and individuals. They are less exposed to foreign economic swings or regulatory changes, but also miss out on opportunities in growing international markets. On the other hand, global insurers like Chubb, Allianz, and Zurich must manage complex multinational operations. Their structure, management, and strategy involve regional offices, currency hedging, and navigating multiple legal systems. While they benefit from a diversified portfolio that spreads risk across different regions, they also have to deal with political instability, trade wars, and global financial crises that can disrupt profitability. So, what does the future of globalization in P&C insurance look like? With climate change, supply chain disruptions, and political instability, insurers will need to become more agile and better at predictive modeling. The demand for global insurance solutions will keep rising as businesses expand and cross-border trade continues to grow. Expect more collaboration between regulators to create standardized policies for insurers operating internationally. This could make it easier for US carriers to expand into foreign markets without dealing with excessive red tape. Technology will also play a bigger role in streamlining international claims processing and detecting fraud across borders. AI and blockchain could help insurers prevent fraudulent claims in multiple countries by sharing data securely and efficiently. Finally, with rising global risks from cyber threats to natural catastrophes, insurers will have to rethink how they manage risk on a global scale. This could mean developing new parametric insurance products or using alternative risk transfer mechanisms like catastrophe bonds. In short, globalization has made P&C insurance more interconnected, more complex, and more competitive than ever. Whether this is good or bad depends on how well insurers adapt. What do you think? Will globalization strengthen or weaken the P&C insurance industry? Drop your thoughts in the comments, and if you found this video helpful, make sure to like, subscribe, and follow for more insights into the world of insurance. See you in the next one, Insurance Gurus.